everyone. Welcome to a Thursday edition of whatever these are from Guildhall Wealth. Jerry, welcome. I'm Jeremy. And the big news is that silver went unobtainium today in London, pushing the price of silver over $50. We're now seeing the price down to about 48. It's already recovering off of I think it went below, sorry, at 49. It went below 49 briefly. We'll
That's right.
see if the downtrend continues. I don't think it's the end of the bull market. Jerry, first comments and thoughts on silver breaking 50, moving higher than its all-time high, I believe, and the current state of the spot price.
Yeah, the past 36, 48 hours have been just extraordinary. A lot of price action, a lot of velocity. Gold crossed 4,000 an ounce. We're seeing historic prices. Silver, when we opened up this morning after a 3-day China holiday, we were all anticipating a lot of price action in the overnight. We even noticed a lot of shorts coming into the market just prior to China opening up. When China opened up, we crossed into the $51. I had to double take this morning when I came in. We're up over 51, 51.11. It's been record breaking. Definitely reassuring that there's a lot of support, but backwardation is what we're noticing right now. The silver market is in backwardation mode with the futures market.
Well, again, we do have from Mineko64 on Twitter. He posted this, probably the first one to do it, that they stopped quoting silver spot for 15 minutes. It said the London Bullion banks stopped quoting. It's now back on. Cracks are starting to show. Now, I want to add that to a note that we received from one of our dealers. It was there was a lot going on in it. So I'm going to read it and we can kind of break it down afterwards. Okay.
Yeah.
So basically, two major banks were warning today that there's liquidity in the London silver market has nearly disappeared, especially for short-term overnight to 1 month lending and borrowing. So overnight rates have swung. They're trading as high as negative 75%, meaning it now costs lenders heavily to provide liquidity. It costs the lender money to provide the liquidity. The term financing of silver exchange for physical has collapsed. It's gone down. It's gone from 20-cent discount to $1 discount in just a few days. And lease rates have jumped from 5% to 25%. The cost to finance and move silver has jumped from 30 cents to 70 cents, making it increasingly expensive to hold or ship metals out of New York. Hold on to that thought. Many traders who speculated on these spreads didn't hedge properly, as rates spiked, they were forced to sell and borrow metal long-term, driving borrowing rates even higher. So keep that in mind because we've got some stuff to talk about from Vince Lanci. The second bank added some context. London silver inventories has shrunk by 1/3 in recent years. The US dollar terms, the entire London silver market is now 1/30th the size of gold, making it far more volatile. Okay. We've seen a lot of upward motion on that. And the situation is being exacerbated by uncertainty over US tariffs. Of course, that's the narrative, right? And the upcoming Section 232 critical minerals report due out on October 19th. Okay. I didn't know when they were going to go, when they were going to make it official. This looks like got a date for when it could be official, which would be the 19th. If silver is excluded from that list, it could trigger a wave of metal returning to London. True. So maybe that puts it into a tough position of do you have caution for the market or not? So we see liquidities evaporating, exchange for physicals blowing out, the London inventories declining. There's the potential critical mineral policy angle. We're going to have to see what kind of little nuggets or morsels come out about that to see if we can get a little more of a glimpse into what the final judgment for that's going to be. Apparently, Judgment Day is the 19th.
Yeah.
So the market is very fragile. First, before we get to the Vince Lancy stuff, which I think is going to shed light on this, Jerry, what are your initial thoughts on that? Surprised? Not surprised?
No, cracks are definitely showing, as what Maniko wrote. The cracks are definitely showing. And obviously, with the volatility and the liquidity being dumped, and there's really no volatility, there's really no liquidity anymore in this market. Dealers and funds are, according to macro liquidity, what's really happening is liquidity breaking before the inventory does. Dealers are and funds are being forced to dump paper positions to meet margin calls. Futures are falling faster than spot, so the gap keeps widening as even both drop. The link between COMEX and the LBMA is jammed, credits pulling back, and no one stepping into arbitrage. It looks like a price crash, but it's finally a funding squeeze. But it's an actual a funding squeeze. But this is definitely the rush towards physical. A lot of moves with the SLV and with their borrowing rates. There's really no shares to borrow to short the market. So, we're real well supported, but the market is looking for the physical. And as we know, with 6-year structural deficits in silver,
right?
The demand coming in now, October 19th, as you mentioned, the declaration of silver being deemed designated a critical mineral. This is going to be an immense rush. And I think the US has to step up, whether it be what I'm reading from, Eric Jung or even Vince Lancy, the SLV with JP Morgan and this Trump administration, they need the US. It's a tug of war. Who's going to get the price discovery? Where are we going to get the discovery of price from? Is it going to be the West or the East? It's a tug of war, but he who has the gold or the silver makes the rules. So the rush for physical is clear, and the dumping of the financials, the dumping of the futures is on, because we know the very problem was the derivatives market in silver. Over 400 paper claims. This futures market is a claim for physical silver in the future. How many days out, how many weeks out, how many months out? It's a claim. It's an IOU. And you start creating these futures contracts. You create artificial supply on product that you probably will never get. You roll it over and over again. They're obligations. But this is where the lie comes in. People want, and countries want, the true price discovery to happen. It's happening right before our eyes. And just exciting to see. We're recording this on a Thursday when China opens at 6 o'clock.
Right.
I think $51 will be revisited. We're down and around mid 48s, but still on the year to date, silver is around 70%, up 70%. Gold's up 51%. And even when silver went over $51, the silver to gold ratio was still around 80-1.
Yeah, I think that this information about what's going on in London definitely could explain the downward movement today in the market after seeing it rise overnight, right?
Yeah.
One thing, though, that I haven't seen with the current pricing where it is, which you definitely saw, I mean, you let me know, but we definitely saw this in 2011, is the COMEX changing its rules, right? Oh, what you would normally see before a real big price smash is that they would raise the collateral percentage on the COMEX. They'd say, oh, no, we're raising it up to 30%. In other words, they would force holders in the market to cough up all of their product. And we have not seen that today. We're seeing speculative mistakes, right? Not underestimating what could happen if the market goes the other way.
Mm-hmm.
But we're not seeing rule changes on the COMEX, right? And what's the rule number one on the COMEX is we hold the right to change the rules, right? So
which they do, yeah.
Vince Lancy did post this a few, less than an hour ago, that today SLV just took the spot market from the LBMA.
Right.
Just as we absorbed Bitcoin liquidity with the ETF, London is dead for metals now, broken. LBMA and LME are in the same place. It's the US versus China now in metals, and the US must protect market pricing power franchises as pillars of the USD. Right, and he also notes the lightsaber. Well, he does trading, so he's looking at it from a different angle than we do. Fundamentally, everything is still in place for the market to move much higher, and it's an interesting day where it feels like they're trying to make it look like you're going to get the same peak you did
Yeah.
in the past. But if you look at Katuza Research, he does a lot of posts this kind of same chart over and over again. The spike in 1980, the spike in 2011, and where we are on sort of the spike chart today,
Right.
we're nowhere near anywhere near a spike. So fundamentally, things look very strong. Let's jump out of here. We got some stuff to do at the office. Any last?
Just really quickly, just back to that
Yeah.
post regarding the SLV and the comment how it's East versus West. This would, in my opinion, talk about currency wars, and I think we're beyond that. I think it looks like a tug of war between East and West, come to think of it, but I think it is leveling the playing fields with the currencies. It's trading with each other once again. It's mercantilism, and it will allow the U.S. to do what China has done, what Hong Kong has already done. They blockchain their gold. They're set up on the path with the BRICS vaults, and maybe, just maybe, in North America, the BRICS vault could be the SLV or the JP Morgan used to blockchain whatever's inside of those vaults for the purpose of the United States to blockchain their gold. We know just last week we reported that back in summer or spring, that Tether bought tons of gold to back up that stable coin. They brought in stability for their stable coin. And, we have Judy Shelton out there discussing this implementation of, a gold-backed treasury. And, this is one step closer to history.
But definitely the speed at which things are going, she might just get her gold-backed treasury by the anniversary for the US.
That's right. Yeah, certainly right.
Well, let's leave it there, and we'll talk soon.
Take care.
Bye, everyone.